Welcome to the Euro Trade, everybody. It is Thursday, and I am in my robe because we are nearing the end of the week, and I want to be super relaxed. Now, it's NFP tomorrow, so usually ahead of NFP, we do see a lot more range-bound movement across the board. Gold has been one exception from that. But before we begin, if you're new here, welcome. My name is Marcus Stalker D, aka Deeyana Angelo. I've been trading for 18 years. 13 years out of that, I've been trading for various prop firms as a commodities trader. So I do trade DAX, but we don't have DAX just yet on Topstep, hoping that that will change at some point. And until it does, we're going to stick to copper, we're going to stick to platinum, we're going to stick to gold, and quite possibly maybe RBOB at some point, if maybe, just maybe, if we're trading somewhere close to settlement of NYMEX, which is usually during the main broadcasts. I am not a huge fan of people learning on NQ. If you've been trading for many years, fine, you can tackle that beast, but frankly, from what I've seen as a VIP coach, I don't think NQ is appropriate for most people. Unpopular opinion, right? Now, the reason why is it's way too fast for most people to get their head around, and it messes with people's emotions a lot. I always say NQ giveth and NQ taketh. While it's a very, very fast moving product, it's really like Coach Jay actually said it really well. He said it's like learning how to ride a bike on a Formula One track. So your brain is like all over the place. People are zooming past you, and you don't know what's going on, and everything is just happening at quite a lot of speed, and it's causing anxiety, it's causing fear, it's causing FOMO, it causes a whole bunch of problems. And in reality, most of you who have been around for like a year or two, you're starting to get a decent idea of how to trade. But because you've decided to go for one of the toughest products that does zoomies all the time, it has seizure-like inducing movement intra-candle, you're actually not having much success. So you're in this spin cycle of constantly getting a combine, passing it, getting into an XFA and blowing it up, okay? That's not good. And this is why a part of my mission here is to make people realize that you need to learn how to walk before you can run, okay? Cliche, but very, very true. So this is why I would probably stick to products that are a little easier. Even YM and RTY, they have smoother price movement. So that's something I would advise into the end of the week. In particular, equities have been very range bound. And if you don't have a range bound strategy, that can actually hurt you a lot. Oh, let me do my full screen. Sorry, Bruno. Now, whatever you see here and here, whether it's my live account or my combines, I might take a trade, I might not. Depends whether we get an opportunity. One thing to know about me is that I tend to try and catch larger swings on the day if the opportunity is there. This is not the week for that. Okay, we can aim for maybe 1 to 2 hours on NFP weeks and even on FOMC weeks as well, especially if we have the rate decision. But if you don't have a range bound strategy, just know that there is a way to trade these sorts of days like we've seen yesterday, but with a little bit of a mindset shift. A very good person for range trading is our very own Dolby Time, Nick Dolby. And, whilst we have a different way of looking at ranges, just listen to what he says, and I think he's thinking about making a video about that. I think that would be a very good idea. The way I approach range bound days is to look for evidence of pretty large candles on a 30-minute chart that just wick around. And then you typically, one of the big signs that we might have a range bound day is when the first 30 minutes of New York Stock Exchange opens with a very large move immediately, and then it wicks all the way back down, and then in the very next candle on a 30-minute chart, it just goes straight through it. Very rarely is that a sign of a trending day, and yet it seduces people into thinking, oh my god, we're going, let's go, and then you get smacked in the face, and then you're like, this is shit. And that's when we typically see chat saying things like, this day is pants, I'm quitting trading, this is horrible. But it's just down to a perception change. So you need to diagnose the day properly before you decide what sort of a strategy you're going to do. I see Yusuf said, let me go back, I think he was going short gold. And yet, to me, short gold, maybe if we get to either 3,400 and then we start to struggle, or if we get to 3,420 and we struggle. Those would be my two areas for possible shorts, but be careful. I tried shorting gold yesterday, but it was very late in the day. And actually, if I had been looking at it a little bit earlier, because I wasn't, I was being tortured by copper yesterday. But if I was looking at it, I would have seen the area between 403 and 405 give me what I was looking for. But I was a little bit late, and yeah, it just kind of started chopping in a range, but it was a very, very small range. It's not how, like, I don't like to nitpick. I need a pretty decent sized candle ranges in order to go, okay, we have, 100, 120 ticks of a range. Let's try and position ourselves on the edges of those. Now, because it's NFP tomorrow, I am actually going to stop the live trading for the week. I mean, I don't know, maybe if we get down to gold 33.80, perhaps I might pop in, a few micros in there, but I won't be going into the NFP expecting that we're suddenly going to get, some massive movement one day before. It's a massive release. It's probably one of the main leading indicators economically that we can have. And everybody's waiting for it. So keep in mind that as we go into today, yes, there can be these unwinding moves that happen, but for the most part, that is not the norm. Usually everybody's just waiting and waiting and waiting. Everything's pretty dull, and don't get caught up in that. GWiz is saying long gold. Be careful, because let's map out this chart now. Just be careful, because at 3,400, we actually have a big options level that might act as a stopping point. Now, that's not the gamma wall, which is better for like stopping moves, but the gamma wall is up at 320. So a long might be a good choice. It's just I don't like the proximity of this core resistance. I want to be away from those big market making areas that can put a halt to any moves. And why does that happen? It's because the gamma walls can act as a ceiling or as a floor, depends on where they're located in relation to the current price. And it's a very, very good orientation point, right? And I see some people are going for NQ. Short, really? I don't know. Let me. I haven't actually looked at. Haven't looked at NQ. I've looked at DAX because I trade that. I looked at S&P, YM, but yeah, let's have a look at NQ levels as well, because they're kind of similar to ES. Just it tends to overshoot things a lot more frequently. So let me just drag out the options from my trusted website, which is Mentor Q. The only people who do commodities as well as equities. Okay. Let's see. What sort of a situation do we have there? Yeah, you see, so NQ is already overshot massively, but ES still has some space until that 6,000 level. So I will look at the NQ. Do I have NQ here? Probably, because it's an eval. I don't pay for NQ and ES in my life, so I only pay for YM because, you know, why would I? Because I don't trade it. But YM I do trade sometimes. But yeah, so NQ overshot the gamma wall, and yet ES still hasn't reached the 6,000 where its gamma wall is located. Now, if you take ES and NQ as correlating products, so let's put ES on the left, NQ on the right, and then let's map out the gamma walls. So ES is 6,000, so let's go. And then NQ is 21,750. So effectively, let's also go up to the 30-minute chart so that we're not caught in the minutia of tiny moves. So effectively, these two levels, they're one and the same, but obviously NQ overshot it. And contrary to popular belief, some people are like, oh, NQ is the leader. Maybe during the earnings season. But what I found is that more often than not, this would be a vast overshoot of whatever ES wants to do, because it's a bigger product, it's a thicker product, thicker market, and it has to be a little more stable. So if I were to look at these two as two correlated products, I would say that there's still some upside left in NQ until ES reaches the gamma wall. At that point, maybe we can look for shorts in NQ, but only if we actually stop before the 6,000, or maybe just overshoot it a little bit. But if the market makers go up to that area and then shoot through it, more longs, okay? More longs. Why? Because we never stopped on the first try. And then if a meaningful candlestick time frame hangs above it, meaningful meaning 15 and 30-minute charts, then you can look at a retest of the 6,000 and a further move up. So that is how I like to look at the market, how I like to diagnose a chart. Now, some of the other levels from the options activity called the gamma exposure levels, you can even have DEX levels, delta exposure, but generally they are more orientation points that are weaker. If you want to find really solid trades, I would stick away from most levels from options, apart from the gamma walls, put supports, and only if there's nothing close by, maybe you can go to GEX 1 to 3. That's about it. So hopefully that that clarifies things a little bit more. But yeah, NQ to me is just an overzealous bunny that overshoots everything, and then people are like, I don't understand what's happening. It's like, because you need, I always find whenever I teach people on NQ who are like, okay, we're 2-3 years down the line into your journey, and they're like, I really want to go back to NQ, and I'm like, okay, cool, you've taken loads of payouts, you've proven that you can hold on to accounts, we've dealt with your mental triggers. Now if you want to go back to NQ, let's do it. Just keep in mind all the work that we've done so far. And to me, that's a better way. You have some experience, and somebody's asking whether ES is safer to trade. There is nothing safe in trading. We're putting risk on. So what is safe? ES is a little less crazy, but if you want safety in trading, just know that that is not possible. We are risk takers by nature, and yet most people then spend all of their time trying to avoid risk, trying to avoid pain. So yeah, that's kind of a little outlook for the equities, but I'm not going to be trading equities right now, at least not until we get DAX. And DAX in a similar vein, if we're going to look at the charts, I'm just going to go to my charts because obviously we don't have DAX yet. Let me see. Here it is. This was a trade that I took in DAX yesterday. Again, with some reliance on ES options levels as well. But let's not focus on that right now. So DAX is a little less crazy, super smooth. Whoops. There we go. Super smooth. And where are its own sort of relevant levels that I'm basing actually on a conversion from ES? It works pretty well. So it also overshot because during this time of day, DAX is actually pretty lively. So 24,367. That is where its own call resistance and a gamma wall was. So now that we overshot that, I would be careful of the further upside move until ES also reaches its own 6,000 level. But now this brings me another setup. We could possibly run along either from this initial balance high, which is located at 24,365. It could also go down to VWAP. We opened inside value, pushed very heavily outside of it. And if we get a retest of anything within, where's my rectangle? It's not there. Is it there? Am I being blind? I'm not being blind. It's not on the toolbar. Okay, so if we get a retest of anything inside this zone, and I'll explain the third reference point there. I'm just going to make this a bit thicker. Here we go. So 3 points of interest here. One is that core resistance, former gamma wall that was overshot. And then we have what? We have the 30-minute time frame hanging above it. So now upon a retest, I would expect a little bit of wiggling around, but ultimately it should be supportive. That would be hypothesis number one. However, because we also have VWAP from Globex just underneath it at 24,352, we also have the edge, outer edge of the London session from yesterday, which is hanging at 24,338. I'm not just going to put in a trade. I would drop down to a low time frame, keeping this zone in mind, and then looking for a price action pattern that will tell me that we're rejecting. Now, usually I like to use 2 minutes for that. You can use range bars, you can use whatever you want. You can use tick charts, but that's how I would be approaching this. So I know where my levels are, and you then drop down. Once you have that larger time frame context, you then drop down to a lower time frame, and you scan for that bigger move that's supported by volume. So that's kind of the plan for DAX for me today. So I might be trading my personal account, but obviously I would love to trade DAX on Topstep. Someday we'll get there. What is a gamma wall? Gamma wall is a concept from the options activity where, how would I put this in a simplest way? It basically is a point where it's a measure of how far a product might go and how volatile the price of the option is going to become for every, is it $1 or 1 point movement? I can't quite remember off the top of my head, but it's basically an area, because it has so much interest. It is an area where market makers either have to hedge their positions. It means that they either have to offload some positions at that point, or they maybe have to liquidate some shorts. So it's not like, oh yeah, gamma walls will always stop the price. They will stop it most of the time, But if the conditions are right, they might act as accelerators as well. So this is where context has to come in. You can't just go, oh yeah, it's a gamma ball, let's just go short. If we've had a significant movement up to that area or down to a gamma wall, it increases the probability of the gamma wall being a reversal point. But I combine it with time of day, I combine it with value areas, I combine it with VWAP, I combine it with the outer edges of value, I combine it with, you know, ADR exhaustion points. They're my concepts, they're quantitative extremes, which I take both from the active session and also from the overall 24-hour day. So yeah, it's you don't need to like bash your head too much to know exactly what the area is and exact definitions of it. Just know that there's a high probability that the prices will go towards these levels because they act as magnets, or they will act as accelerators for further upside or downside. Yeah. JD says, D, share your indicators, please. It is my company. Full disclosure, I run a software firm called Blotic, and right now we are still working on the indicators for other platforms. Right now I'm still using my AMP Futures MetaTrader 5, which has a CQG connection where I can also see the bid and ask spread through like little lines that are just there. It's very helpful, especially for thinner products like copper. But yeah, my main three indicators that I have on my charts at all times is the Blotic MP, not MicroPatak, but Blotic Market Profile, Blotic Supply and Demand, which gives me my zones on multiple time frames. So let's go up to a 30-minute chart, and you will see that it just shows me, okay, maybe DAX is not the best choice for this because it's at all-time highs, but let's maybe have a look at copper. And, you know, my charts and my design of my indicators was something that I needed as a trader. So here I can show you relevant, this is now showing me relevant boxes, which is a supply and a demand on a 4-hour chart. If I then go to another button, it's going to show me the daily demand and so on and so forth. I have my average ranges. The blue line indicates when the quantitative extreme for the current session will happen, and the longer dashed lines indicates when we're going to exhaust the quantitative extreme for the entire 24 hours. So literally at a glance, I have all of this data without needing to do calculations or anything, because I used to do it in a Excel spreadsheet. And when I was able to, I had somebody helping me to create all of these indicators. I'm very fortunate that all of our developers, it's only a small team, but the developers are all from bulge bracket banks, and they all worked as like software architects and, you know, software people for very large investment banks. So the quality of them is amazing, and we're kind of hoping to bring them to other platforms. Right now we're working on Ninja. Depending on how things go with, so the team is a little bit, they don't like TradingView. They're like, hey, TradingView, PineScript, ew. But now with the API access, where you can basically use whatever you want on the back end and just use the API access to connect into TopstepX, you know, it might become possible for us to start maybe creating some of our flagship indicators, so Blotic DR, Blotic MP, and Blotic Supply and Demand into TopstepX. So maybe that will come. I'm not going to say it's going to be tomorrow, but give it a year or so. You know, it takes time to translate indicators into other platforms. And now that we can use, like, you know, Visual Studio on the back end and just kind of pipe it into something else, it might be easier. I don't know. We'll see. Sean, we are working on it. I can see your question. Is Blotic available for NT8? Not yet, but that is the current project that I've got going on in the background. So yeah. Again, you know that I'm a huge proponent of having other businesses and not being super stressed out. Like the stuff that I use payouts from any kind of prop firms, and I have done for a long time, is for trinkets, right? So this new computer that I'm streaming from, it cost me probably about let's say 4.3 thousand pounds, so nearly like 5,000. That was from the payouts that I took. And, you know, I've actually decided to invest in a pretty good camera as well, because I've got this camera. It's, you know, it's pretty nice. I've been using it for many years now, but I think I need to do a little upgrade, and, you know, I still think that, you know, investing in the lights and businesses and pushing your business life forward and bringing more quality to people, I think that's where my current goals lie. To build out the studio so that it looks very, very pretty. Now, for those of you who have a keen eye, like I'm not, let me just put me in the whole big picture. So if I move slightly, you'll see in the shadows we've got Bob, the neon sign, lurking. Now Bob is going to be probably somewhere in the middle of the room, but for now he's just resting in the shadows, right, being illuminated by a single lamp that is sitting on my saxophone case at the moment, because I don't have a stand for it, and I don't want to mount it on the wall. I could do, but it yeah, it's kind of one of those things where the closer it is to the bright wall, it sort of just diffuses the light too much. So I think I'm gonna have to put it somewhere. But yeah, that is coming. So we're gonna have Big Bob just waiting in the background for the puts and calls to arrive. Lighting, I'm actually pretty sorted. I have two Elgato lights, and I also have the one big key light as well. But I see people don't like the lights. Okay, well, we're gonna try to do something. I do think that the lighting is more to do with the camera than anything else. However, I am a little bit yellow, so that's it's just like my complexion, I suppose. I am Mediterranean, and I don't have a tan at the moment, so all of us kind of go a little bit grayish and yellowish. So that's probably not the lights. That's probably D, because you know I have a lot of yellow undertones in my skin tone, just naturally, and my sister is exactly the same way. So you know. So if you don't like it, you don't have to look at me. You can just listen. But yeah, I'm gonna try sort it out. Maybe get some blue lights or something to offset my yellow natural yellowness in the face. Yeah. Apparently I look like Adam Warlock. Okay. What's wrong with that? I like that look. Yeah. You don't like? I think that's a pretty cool look. Looking a bit golden. Trading gold. Looking golden, yeah. Hikari is asking, does Topstep have a real-time deduction or bounce when you request a payout? Request a payout. Only on the new dashboard, which I don't have, by the way. I am not from the US, and right now only US people have access to it. But yeah, in the new dashboard, yes. If you're on the old dashboard, no. There you go. Jardar says, definitely not the sun causing that light today. No, it's a very miserable day outside. Yeah, maybe, you know, now that we're in the big house and stuff, we're still kind of settling in. At some point I might like do a tour of the house, like sort of like Topstep cribs. It's a really, really nice place. It's completely suitable for us. It's not massive. It's a very spacious, single story, but no more stairs for me, which I'm very happy about. Dax is getting there, yeah. Yeah, we'll see what happens there. Where am I located? Well, I'm not going to give you my exact location, but I will say that I am in Surrey, in England. I lived in London for 20 years, maybe even longer. And then I just got sick and tired of everything. Top X is camera secondary. Yeah, I know quite a lot about cameras, but the thing is, again, with my complexion, I tend to look yellow wherever I am. So I would have to do some pretty heavy color correction to get that, because I am like, you know, you can't help your natural skin tone. It's like, what do you want me to say? Yeah, every time I'm next to someone, you know, somebody takes a photo of you know, either English people or, you know, any other sort of white person of not of a Mediterranean background, they all look kind of like a little bit rosy, you know, whatever. I always just look yellow. So go figure. You know, I am a bit of a Mediterranean mix. So we've got, obviously I was born and raised in Serbia. I am Serbian, but I also have Italian, Greek, Turkish. And then if you go far back enough in our family, there's like some northern India in there mixed in. So yeah. Mark S is asking, how do you quantify home living space in Europe? Is it square feet or square meters? You know what? We are so messed up over here. We're supposed to be metric. But for some reason, all right, so DAX is getting a little bit of a movement. What I like to do with these levels, so let me go back to DAX at the moment. What I like to do with these levels is when we hit one of these call levels, and let's say I'm speculating along, I actually like to use a 10-minute chart, which is not, for some reason, it's not enabled in TopstepX. Once we hit it, I wait for another 10 minutes. And then if I have a reversal, especially in DAX, like, you don't have to rush because it is very smooth and it gives you that follow through. So you don't have to like mess around with very, very low time frames. But I usually like to wait for about 10 minutes after we hit the line, just to make sure that the larger time frames are still sustaining above it. And if they're not, then I will look for a different setup or maybe to dip deeper into the zone. DAX loves testing Globex VWAP before it does anything else. But yeah, we'll see whether my little trading idea here. Again, I'm not itching to trade today because it's like, whatever, it's NFP tomorrow. So I'm perfectly happy to wait until we shake everything out and then come back Monday. Don't really fancy getting stuck, because what could happen, let's see what the time is. So around about 10:30, 11 o'clock, which is in half an hour to an hour, DAX has this annoying thing to rotate through whatever range it's established since the open. So I'm mindful of that, and this is why I want to give it a little bit more time on a little bit of a larger time frame to show me the reversal. And then how much space, how much statistical space do I have? I have 173 points up to the average session high for London. That's a hell of a lot of space. You know, I'm kind of looking at maybe taking 70 to 100 points from it. So there's, you know, there's lots of space there. So if it's a true upside move, I really am not rushing to get involved. But yeah. Let's go back to gold, actually, because I have been interested. Because I've noticed, here you go. You see that core resistance? Yeah, let's get rid of NQ. Yeah, so core resistance, 400, just like I said. So now we wait. So again, same rules apply. You hit the core resistance and then wait for 5-10 minutes and then see whether we hold below it. And then if you hold below it, you can have a little bit more confidence that that short trading goal, which is very dangerous at this point, you know, it's very early in the day. We have a long, long day ahead of us. And I actually locked up my live account until my 3 p.m. because I want to trade it during COMEX. I think more opportunities are going to arrive. Really, my plan for gold today is not shorts, but it's actually longs from 33.80. So if we can get down there and I can find good contacts around that area, that would be my primary choice of entry. So longs, not fighting shorts. Maybe if we're like at the end of the day and I'm sitting at some really tight area that I can lean on, maybe 34,200. Sorry, 34.20. 34,200. 34.20. maybe into settlement, you know, last sort of half an hour or so of active trading, even though it continues to trade after. Maybe we can get a short from there, but this is too close to VWAP, because, you know, it might be getting prepared to lift off again. You know, this is gold. It's been on a relentless uptrend. Those bad numbers yesterday that we had from the economic releases also didn't help matters. Let me have a look at the questions, because I haven't been keeping. Sarah says, finally past 5 XFAs. I'm taking it slow and steady this time. Excellent. Remind me, Sarah, have you taken any payouts before? Sarah says, I'm in Surrey too. Neighbors, yeah. So I'm kind of on the edge of West Sussex and Surrey. Like, it's pretty far down. Again, not going to divulge exactly where I live, but yeah, it's a beautiful, beautiful area. We have cows. They've just had calves, actually. I saw a little calf yesterday. I sent it to Coach Hoop. And I mean, for Coach Hoop, it's nothing new for him. You know, he's grown up on farms and stuff. He's in Arizona. And I think he was in Chicago before, obviously. But yeah, he's in Arizona now. So yeah, it's... Wrecked says, sounding like my parents, no stairs. Yeah, you know, I do have an illness, so that every time I went up the stairs, I kind of felt like I lost an energy spoon. It really wasn't good for me. So yeah. So Sarah, have you taken payouts before? I think you have, right? Not with Topstep. Okay. Yeah, then go for it. 5 XFAs, just, you know, don't full port. And I suggest locking up your risk settings for Globex the previous night. So, you know, I don't know what time you go to bed and stuff, but if you stay awake, or maybe you can just set an alarm and you can set it up so that you don't ever find yourself in a situation where the risk lockout is not there. It will definitely prevent disasters going forward, especially in those first stages of new XFAs, definitely. Okay, Rect. Oh, hold on. TopX says, do you look at open interest in options while trading futures? I look at open interest only end of day, and only if we're like some very big inflection points, as Hogue would like to say. And actually, I use Hogue as my indicator. Like if, because I know he tracks it for some of the products that, like for example, he tracks gold, because I know that he trades gold. He tracks crude oil, obviously ES and stuff. But if I'm looking at open interest, I only want to look at it like, let's say if we've come up to a swing extreme, and I'm like, okay, well, what's the open interest doing? That gets a little bit shady around the rollover time. Now, copper and platinum, I do believe they will be rolling over at the end of this month. It's going to be I think it's the final 4th Friday of the month. That's when they usually roll. But they frequently skip over a month or two, right? Gold is skipped a whole bunch, and that's to do with the demand for the delivery or needs of the producers and users of the commodity. So that's why that happens. So I don't look at it religiously. It's not like, oh my God, let's see what open interest is doing every single day as a part of my plan. But every so often I'm like, okay, we're up at the top. What is the open interest doing? Are we losing people or are we adding? But it's not, you know, it's not like. Rex has a good question. I was watching some of Aaron Trade's videos earlier, and he mentioned only taking one contract and aiming for only 1.5 to 2 R for consistency. What are your thoughts on that plan? So I am in favor of that plan, but it's context. If we're in range-bound markets, now he trades gold. Gold has been bonkers, right? It has a huge range. So it's not that hard to find an opportunity in gold within a 300 tick range when we're supposed to be in quiet markets, in a quiet market that's considered quiet these days for gold, to go, like, let's say, even for 50, 60 ticks stop loss to get about 120 to 200, because it's still within that range, right? It's still within the average session range. If I look at it, look at the ranges on the daily chart, so not just using the session range as an example, we're working with 561 ticks of average daily range. So that's full 24 hours over the last 10 to 14 days. So if you only want to find, like, 50 tick stop, 100 ticks profit within that range, that's very possible. But then let's look at something like crude oil, for example. Let's look at crude oil, and I'm going to use my charts here just for efficiency and speed. Yesterday was a tape bomb day, but let's go to NYMEX or the other days. What is the average session range for NYMEX? 121. What is the average daily range? 167. So you only have 167 points to play with. Now, to me, that's below my requested absolute minimum of 180, but really over 200 is where I want to get involved. It's kind of like the same as CVol. It tells you the volatility of the product in a different way. So when you have a day that looks like this is why I don't like crude oil anymore. It drops during the initial balance, drops down 128 points. First of all, that is already overshooting the average session range. So that's already an outlier day. So then you're going, okay, and here's how I got in trouble last year with crude oil, because I got used to crude oil having 300 to 400 tick ranges during the session. Not during the whole range, just during the session, not the whole day. And then you would be going, okay, well, all right, I'm going to try 3 micros long, and I'm going to use 55 ticks here for a stop. And then I'm going to do 2R. So Aaron says 1.5 to 2R. Yeah, I agree with that. This is a potentially trending move now. We are smashing through the core resistance. I'm not doing this terribly accurately. It's just like, okay, well, we've gone over the core resistance. Didn't manage to immediately hit it and bleed down through it. It's actually a full sort of 20 ticks above it. It's a decent sign that so far they haven't adjusted inventory to the downside, so let's just run that. DAX, I don't like that reversal in particular. I think that's going to start ranging. So maybe another test of the gamma wall, and then maybe I'll have something. Usually I like to trade DAX from my 11 o'clock, so until that time comes, I'm not too bothered to jump into anything, because that's my prime time, 11 a.m. to 1. So that won't come for another 45 minutes. Yeah, so let's go back to this crude oil chart. So when crude oil was trading normally for the last 12 years, as I've known it, it would do a failed auction, which is what you see here, extended downwards a little bit. Like if I go back in time, you will see that we also hit the average session range low right around that. So it's like, okay, we exhausted the range. What is the next logical step? The next logical step is that we go back into the initial balance and then rotate significantly back where it came from. That's how crude oil used to be. But here's what it's been doing for the last year. One big move, and I don't know, you probably have to be like, okay, on this day, this wasn't that difficult to read because we hit ADR high and then reversed. But on most other days, if you don't have any kind of reference, it's very, very difficult to figure out what crude oil will do in the first several minutes. And then if you do catch something, that's great. But again, if I go back even further, this is the kind of stuff you can expect from the initial bounce. Up, down, up, down, up, down. Like one of my Australian traders says, he's actually a coach, like up and down like the horse drawers. It's a very very interesting way of describing price action, but very accurate as well. And here is the problem. So I like to base my decisions on the 30-minute chart. Why? Because before, crude oil was very conducive to that. It was beautiful. It's like you just find a trade in a larger time frame and you run it for about 70 to 120 ticks. Easily done within a range of about 400 ticks, right? Not so easy in this sort of price action because it gets stuck in a range. These are 30-minute candles. This is 2 hours. So I'm like, okay, I can nitpick and lose my eyes. And frankly, at almost 45, I really don't fancy doing that anymore. I want trades that are obvious. I want trades that are slower, decisive, and go into a particular direction with some follow through, whatever that setup is, whether it's a breakout or a mean reversion or a failed auction, value acceptance, whatever shape those trades take, I want to see follow through. I don't want 2 hours of nothingness. But this is probably scalper's paradise. It's like it goes up, it goes down, it goes up, it goes down. It's like brilliant. That's not my style. I hate doing that. Like the only time I would do that is if the 30-minute chart, so the TPO profile, extends to both sides and then we start chopping around. That's beautiful. I love that. That's range-bound trading on the larger time frames, so 30 minutes, and then we're just basically working within about 100 tick range. This range is barely 50 ticks, okay? So you have to be super accurate, super precise. You have to keep staring at like super low time frames. And you also have to wait, endlessly wait, sitting in front of the screen because you don't know when it's going to happen for the stop runs and reverse. Stop run and reverse, right? That is the name of the game for range-bound trading. So imagine me sitting here, 2 hours not having anything, no trades, nothing. Finally it happens for the, I call this the post-NY cut. So it basically happens effectively into the euro close, right? But I got the setup already showing up as a potential range in, let's say, D period. But I would have had to wait to establish a range. So it's like, because you don't know it's a range. Like all you're seeing at that time, all you're seeing, and you tell me whether this is easy or not. So let's make this bigger. Where are we? I've lost it now. Oh, here it is. Okay. So imagine this is real time. And all you're seeing is this. That's the price action you're seeing. So I'm like, this is a failed auction, right? So I go long, and yes, we have VWAP, but you know, in this situation, it's not that relevant, and especially not on crude oil. Like most times, it just bleeds through VWAP. But yeah, you kind of go, this is a failed auction. But then, and knowing 12 years of data that failed auctions go full rotation, then you get, then you get this, and you're like, oh, excuse my language, bollocks. It's a range. So then you go, ugh. So now you're down money. This is how trading gets frustrating, right? And then you're like, right, well, let me wait for stop run. Let me wait for a stop run and then maybe try and snipe it. And it finally comes. But it comes after you've already spent like nearly 2 hours of your life glued to the screen. What happens to our mental capital if we're continuously staring at a chart for 2 hours? It gets exhausted. So at that point, you're more prone. Take a look at Neuro Wednesdays yesterday with Jerome. That's exactly what we were talking about. Mental exhaustion and how long you have until your glucose runs out of your brain and you start making crappy decisions because you are effectively exhausted mentally. You might not be tired physically, but mentally, there is no more fuel. And unless you go away and reset your body and your brain, it's not coming back. So to me, that's not a good way to trade, right? And that's what crude oil looks like on most days. Now, it's extremely frustrating. So this is why I moved away from it. I'm like, well, I'm not interested in this. Okay, so gold is making a very, see what I mean? So this is what I mean about smoother movement. You find the opportunity and it just goes like 43 ticks without drama, like intra-candle. This is not whipping back up and down for by about 20, 40, 50 ticks, 100 ticks, up, down, zoomies. We're very young. We're zooming. We're raving. Everything's crazy. Everything's getting off. That's NASDAQ, by the way. Gold is like, we went above the core resistance, wasn't paying a close attention to it. It just went. So it's like smooth price action. Any intra-candle movement for now, it's not that dramatic, right? There's no drama. It's like, yeah, we're going up. And it's not NASDAQ like, we're going up, we're going down, we're going up, we're going down. We go all the way down and all the way up. Where are we going to end up? Nobody knows. It's like, what kind of price action is that? It's horrible. How can you people trade that? It's awful. But yeah. Fran says, can you explain what core resistance and gamma wall, how do you calculate? So I don't calculate it myself. I used to look at the option matrix myself and then try and figure out what's happening. I have a fly that's joined here. It's the only problem with the countryside. You do tend to have... missed it! Go away. Yeah, so that's going to get annoying. Anyways, I don't look at it myself. I used to have to look at it myself because I always used options activity in some shape or form to guide my decisions. But there are brilliant companies now like MentorQ. I'm happy to do like collaborations with them, but I'm not like an affiliate or anything like that. So it's just a company that I really enjoy. Why? Because they have simplified very, very complex data down to like one line on the chart. And that's all you need to know. So they have an academy as well. You know, it's all included in their membership. So basically whenever you are, if you're interested in learning more, that's the place to be. But I did explain a little bit about the gamma walls earlier in the session, so I won't be repeating that now. Jake is asking, how do I get into your mentorship on Topstep? I keep applying, but don't seem to hear anything back. So they do drafts, right? They do a random draft. I have no control over that. Now, that's a group mentorship, obviously. So we have each 50 people, so 50 traders for each coach. There are 10 teams. Technically, it's kind of a competition, but we're not really in competition with each other. Everybody behind the scenes, we are all, you know, pretty good friends, and there's no, you know, oh, hey, yeah, I'm going to beat you. And like, there's none of that. We're just all just traders trying to do our best and wanting to change other people's ways if they're struggling. Obviously, if you're not struggling, then you don't need us, right? That's not useful. But if you are struggling, whoever you end up with, it's if you manage to get into a VIP, it's going to be quite a transformative experience. Now, yeah, I do have my personal coaching as well. I'm very, very selective who I take on. Usually, I look at the background of the person. Typically, people who do very well are engineers, doctors, former athletes with some university, former musicians also with university. Why? Because of the formatting of the plans and stuff. I don't want to spend a million years explaining to people how to format something. So I'm very selective, and I also ask that the person has over, ideally, 2 to 3 years of active trading experience, as in like trying, actively struggling, and you know, and then I go through a whole interview before I decide whether to take them on. But for group coaching, it's different, right? It is a pretty random draft. You do fill out as many forms as you can, which increases your probabilities of getting into the VIP, but even if you just filled out one, you will still be in the running to potentially be chosen for the VIP. But I don't think you can choose your coach. Maybe not yet. I don't know. And I don't think you should. I think all the coaches are amazing. Like literally everybody is so experienced. You know, we're all on the same page with our teaching. I said it yesterday with Anne-Marie when we were together for lunchbox trading. You know, none of us are saying anything radically different. Like we all have slightly different styles, but we're all here to come up with an approach that is statistically viable and to help you get there as well. As simple as that. So yeah, just keep an eye out. If you filled out, you know, those forms, then at some point they will be announcing the winners of the draft, and it's just how it's done right now. I don't know, maybe in the future. I really don't look. I'm just you know, I'm just an on-air personality. So you know, they ask us, "Do you want to do this?" And I'm like, "Yeah, that'd be awesome," or "No, thank you." You know, that's kind of where things end with those of us who are more contractors. But with you know, with the VIP stuff, it's it might be like, I don't know what they're planning, right? I don't, just to put that out there. But I wouldn't be opposed to, like, for example, people wanting mentorship from this person or that person, and then maybe we can have some kind of a, you know, paid for service for the VIP. Like, you know, it's beyond me that you know, Michael is going so far out to offer this for free for traders. It's beyond me. It's like, he's so driven, he's so generous, he's a big big right? And that is what I respect about Michael Patak endlessly, right? This is why, one of the big reasons why I'm with Topstep. It's a big reason why, you know, I have Hogue there. There's Eddie, you know, I've known both of them for a very very long time. And it is definitely a family, but it would be nice if we maybe expand that family to people who maybe want to pick the coach. I mean, I don't know. I really don't know. So I'm just kind of playing with ideas here, right? D, do you still use Edgeful? If yes, what are the benefits? Well, the benefits are that you don't need to code and you don't need to create your accounting algorithms. All right, we're so close to this target now that I'm not going to nitpick, but I'm actually going to take profit there. There we go. That's one trade done. This is kind of unusual for this time of day, so and it feels newsy. It went my way, but it does feel newsy. What does newsy mean? It means there was some sort of news release or tape bomb. Yeah, so we had your zone PPI. Okay, that's great. This fly is like, we decided to join the stream. You want to co-host, mate? Like, come over. Yeah, don't be shy. You just literally just decided to join me. I have a buddy. Should we name the fly? I had the window open earlier, and obviously I live in the country, so yeah. So Edgeful, yeah, it's very good for let's say how many times the initial balance breaks to one side, how many times it breaks to both sides, what is the average extension of that initial balance, and then you can put it in a bucket of like per day. So on a Thursday, how does gold, for example, break the initial balance? I'm still with them. You know, I'm still a member. Do I use it every day? No, because most of the stats I do know. One thing I'm not happy about is that Andre, I think, removed the TPO value gap, because I used to use that a lot, and then they did like a overhaul, and it seems to be lost now, so maybe I need to go TPO value gap by session, please. So maybe I need to sit on a call with them again. Jardar is educating me now, because you know, I was a city girl all of my life. This is the first time I think this is like my third time seeing cows live. And he's saying, you will have the privilege of horseflies this summer in the country. Horrible things. Are they different than normal flies? I haven't seen them yet. The thing is, excuse me, this house is on a massive estate that has some like big historical Tudor connections, like political and stuff. So it's a very massive, it's not like some dingy little farm. It's an estate of like 2,000 acres. It actually encompasses not just one county, but two. It's enormous, and we're kind of at the edge of it. And technically, by me buying this house, there is a clause that if there's any work that needs to be done on the pathway leading up to the farm, we might be liable for that. But I don't think that anyone knows that, because this estate has been here for like literally hundreds of years. This is why, you know, Tudor connections and all of that drama and stuff. But yeah, it's a very well maintained estate. And because, you know, I don't smell the cows. They seem to be quite trim cows. You know, usually cows are a little bit fatty and chunky girls. But now they are, you know, all of them are pretty slim. And there was a new calf running around with his mommy there. It was ultra cute. And I showed Hoop. I was like, look, we've got calves. We've got calves. And the mom was like pushing it. I'll actually post that on my Twitter. You can find that. You can find my Twitter below this, or X, Twix, the way Eddie says it. But yeah, let's go on to the next question. So, trading 23 hours a day is not advised. I think I have an addiction to trading and always wanting to be in the market. Yeah, it's so trading is not gambling, but like Jerome D says, it can lead to gambling behaviors. I fully agree with that. We're not supposed to be in the market 23 hours a day. If you're running a swing, that's different, because you're not being active. You are finding an opportunity and squeezing the hell out of it as much as the day will give you. Entirely different. I do that as well. My average trade time is between, like, obviously it varies, but it's between 82 minutes to 100 minutes. Which means, on average, I hold my trades for at least an hour and a half. But I've had trades that I've held for 5 hours, 6 hours, 7 hours. Easy. That's different. However, if you're sitting there for the entirety of your day, 12 hours, 16 hours, doing trade after trade after trade after trade, that, first of all, you're going to burn out. Like, dude, there's no doubt. I don't know how old you are. Don't need to know either. You don't have to, like, you know, put yourself out there. But I will tell you, if you're younger, that can just about work. The older you get, remember, I've been doing this for nearly 2 decades now. The older you get, the more difficult it gets to sit there and just smash trades. I'm just going to clear my throat. My little co-host is at it again. It's like, hello. Like, every so often it just flies in front of my face. Probably because of the light. But yeah. Yeah, you want to join? What should we name the fly? What should we name the fly? It needs a name. Jordan says, you try to shake them off. It's the horse flies. You try to shake them off your arm and they just cling on and bite you. Oh boy, that'll be great. Yeah. I don't think I've ever been bitten by like many things. Maybe a spider a couple times, but yeah. How long did it take me to become profitable? Because I had the guidance literally from the moment that I started trading by a friend who put me onto the trading side, and he was already working for, first he worked for an investment bank, and then he went in for a small hedge fund. It was one of those like 2 guys in the Mayfair office kind of thing. But then he went back into the city to trade for a prop firm because he didn't really like the whole corporate side of it. But he came away from his experience with how they look at the markets. And the first thing he told me about is the trade location. It's the risk control, stop runs, and how to place a stop loss and never use more than X amount of Seth Brundlefly. I like that. Yeah, that was actually one of my favorite movies when I was little. Yeah, Seth. So we have Seth joining us today. and now for those of you who have joined me just now, they'll be like, who the F is Seth? It's a fly that decided to join the stream this morning. So it keeps buzzing around on the main key line. It's like, this is nice and warm. This is nice and warm. Hello, hello. It's like, yeah, hello, Seth. How you doing today? Yeah, pretty good. Yeah, so I didn't have any kind of moments of, wow, I'm wildly unprofitable for 2 years. In fact, when I first started, and again, my friend told me, don't put money into life, because I did that when I first thought of trading. I was like, maybe I should invest in some stocks. And it was 2007, and I put in like a small amount. It was like £400 or something, and I put all of it on Intel long. Now, little did I know, had I just held on to that through like the credit card and stuff, I would have done really well out of that. But what happened is that the first week it went up massively in my favor. It went up to like 10 times. It went up to like 4,000. And I was like, wow. And I thought to myself, this is very easy. I don't know why people think that trading, And then the next day, it went back on me. Of course, I didn't have a stop loss. Didn't even know what that was. And I lost the 4K and the 400. So then I thought to myself, maybe this is not for me. So I kind of didn't go back there until my friend was like, oh, you're trying trading? I reckon you'd be really good at that. And I'm like, well, from my first experience, I suck at it. And he said, yeah, it's because you don't know. And I said, look, I'm not into math. I was a terrible student. Not for that. Like, I was generally a pretty excellent student, but math, for some reason, if it's pure numbers with no like application to them, my brain just kind of checks out. But when it's applied maths, like physics and stuff, I loved that part. Absolutely loved it. So I was actually pretty decent at physics. Not like an A+ or anything, but I was a B+ student in physics, and yet in maths, I was the equivalent of F. I actually nearly failed my last year in elementary school because of math, and I had to do like an additional exam, and then they just gave us arithmetic, and I smashed it. So my maths teacher was like, I'm going to kill you. And I was like, why? Well, I've been watching you just like be completely sucky at maths for like 4 or 5 years, and now you do this like when push comes to shove, I can't give you an A. I can't. This is a, what you call it, like a supplemental exam, because according to the laws in Belgrade back then, you couldn't fail the last year of elementary school. It was against the it was just like deemed that you cannot fail the last year. You can fail any other year, but not that one. And I mean, the laws have changed. I went to school like a million years ago. So we're talking like 1994 here, long time, very different than now. So I knew that I'm okay with just like, calculations and stuff. And in fact, I'm excellent, but geometry got me, some of the other parts that you have to do with maths just totally derailed me. I wasn't interested in it, and I was bad. Like geometry to this day, and the weird thing is, in 3D space, I can make things pretty well. I'm actually really good at that. So like sculpting, I've tried that, pretty good. So there's something about the 2D space that does not compute with me. I don't know what it is, but yeah, Tetris, good. Anything 2D, and yet you're trying to create shapes and stuff, it just way over my head. But when it came to profitability, I had profitability straight from the beginning. So I went into a demo account. I totally considered it live. At that point, I had no psychological traumas as a trader. If only somebody had told me what was to come. But basically, I did really well. Spent about 3-4 months on a demo. And I thought to myself, well, I mean, this seems pretty straightforward. You let go of the trades that didn't work. You look for the larger opportunities. Now, the guy taught me swing trading. He didn't teach me intraday, just to make that perfectly clear. But then I started in live with a £2,000 like very small pot, like basically what we start with on these. And in the first 9 months, I actually ran that up to £70,000. At that point, the currency exchange between dollars and pounds was insane. It was almost $2 per £1. So basically, that was like 140K in the space of 9 months. I think that was too quick for such a novice trader. Why? Because then I got overconfident, overbiased, and I was like, I am the wizard. I need to get a wizard hat. For the moments when I still experience that I am the wizard, because I still have those moments. But I'm better at managing myself, because what happened then is that I managed to blow up the entire 70K in the space of a week. I got biased, kept moving stops, removing stop in the end, and trading things that I've never traded before. So I spent, those 9 months trading euro dollar exclusively, and then it was like gone. But luckily it was just profits. Like, net in my head, it is a 70K loss from back then, but really real money, it was only 2K, because that's what I put in. But it was the work and the time, it's always the work and the time that goes into it that hurts more than the money itself. And that's what got me on the path to learn about neuroscience, to learn about how we actually do things in our brains, and why we tend to be so stubborn, I suppose. And then I discovered that there's a fight or flight response. Then I tried to learn as much as possible about adrenaline response in the body, glycogen reserves, how we can control that better, what fuels the fight or flight, how do we make sure that that doesn't happen. And that's when I started going to the gym. Went a little bit overboard with that, because I was supposed to go to the gym just to control my emotions, right? But actually I started going to the gym as if I'm only ever going to compete as a bikini fitness professional in my life. So I did like 10 competitions in the space of, I don't know, a year at one point. But I started lifting a few years beforehand, really loved it, and then arguably pushed it a bit too far. But it was a big part of my life for a long time. And then I got into prop trading in 2013. So by then I had generated probably about, what was that in dollars? So I'm just trying to do all the conversions. So I had about 220K in pounds, which was a rough equivalent of just under $500,000. So I thought to myself, I'm pretty good at this thing, even though I messed it up at the beginning of my journey. But we're 5 years down the line, and I think I can do this. Let's go and do this professionally. Also, I wanted to learn how to do intraday trading, because euro dollar around that time was kind of going through what crude oil went last year. It died on me, and I knew that my skills needed to grow. So I tried for about a year to kind of crack intraday trading, and I got nowhere. So I was like, I can't do this alone. And I think having the VIP program now as a part of Topstep, where you don't have to go to another country and learn stuff, I think that's a good thing. And you can do it from the comfort of your own home while leveling up your skills. And the entry point for you guys in the VIP is going to be free, right? You don't pay anything, whereas I had to pay a lot of money. Like, it was like 25K to get into the apprenticeship. And then after that, it was like, okay, you get a funded account, but you still have to pay desk fees that are like 3K a month. And JD said yesterday that Jack Pelzer, our own Jack, he had it the worst out of everybody. His desk fee was like 8 to 10K, but he worked for one of the biggest firms in Chicago. The one that I went to, it was it was big, but they were not like massive, and I think they were kind of bit dodgy, because I heard while I was there was like some, I don't know what it is with certain prop firms. There's always like lawsuits and regulation issues and people doing their stuff and then suing them, and that was the case back then as well. So it's a little bit of a kind of cowboy side of trading. It's like, yes, you're in banking, but you're a prop trader. It's like, okay. And to me, that actually resonated, because I was a musician. I had, huge purple, red hair, had pink hair at one point. And I didn't necessarily want to be a part of the corporate world, like do or die. In fact, when I went to work for an asset management firm, the first thing that they told me is that I need to get rid of the hair color. It's against the dress code. And I was like, oh, this sounds like fun. Brilliant. So yeah, it didn't take me long to become profitable. I was profitable from the very beginning, apart from a few blips along the way, but it's all because I got put on the right path, so to speak. So yeah. Top X says your teacher was the issue, not you. I assure you that the teacher was not the issue. I was so into music that nothing else interested me. Like I was obsessed with music, and from the moment that I woke up, I was either singing or playing instruments or driving my mother up the wall, and it was just like, trust me, people tried, right? They would. So let me explain to you how I was with math. They would be like, okay, here is an equation with two unknowns, and I don't know, blah, blah, blah. And then I kind of look at it and I go, oh, God, snore. Here we go again. Equation with two unknowns, brilliant. And then I would be writing it down, and I would write it down wrong. I would put like 3 instead of 8, or like 4 instead of 1. Now I'm a left-handed person, so granted my handwriting has always been absolutely horrendous. So maybe that had something to do with it. But it was the sheer disinterest on my part. You start talking to me about numbers, and you know what was the worst? Like geometry and another thing. Textual logical assignments. Oh my God, I'm a visual person. Not like somebody who can just listen and take in information. I don't do audiobooks because I need visual in front of me. I need something that like I'm reading, I'm seeing, and it's presented to me in a visual fashion. No, they're like, if train A goes to train B, if you want to torture me, that is what you do. You give me a effing textual logical problem in textual form. I glaze over immediately as soon as I hear, if you do this and you do that and what, blah, D is out. Like, she checked out. She's over in Lyon visiting Jerome and Bruno. She's not here, right? That's a very difficult thing to tackle. It wasn't the teacher, I promise you. It was me. My mom even got me like private tutors. Did not work. But when push came to shove, I was like, holy crap, I'm going to fail. I need to make this work. I put all of my focus into it, and guess what? It worked. So yeah. But to me, trading is more equal to music, note sheet, pattern matching. And, turned out that I love data. I love science in that regard. Applied maths, right? Applied maths. But yeah, profitability wise, I'm probably one of the few people that had the right guidance from the start. And I'm not saying it's linear. I go through drawdowns. It's just a normal fact of life. So it's like you go through a drawdown period, then you're smashing it. Then you get another drawdown period, then you're smashing it. It's just a cycle that we live in as traders, and that has to become your new norm. You have to get comfortable in drawdowns and just go, hey, it's just how it is. Market's not playing ball. But, at this point, for me, I know why. That's the difference. Whereas when a more novice trader gets into a drawdown, it's like, what is going on? What's happening? Like, for example, I had somebody in the VIP who got into a bit of drawdown during the high volatility. And he was like, I'm just not going to trade now. And I was like, what do you mean you're not going to trade? We have amazing movement, man. It's like, this is what we live for. And they went, yeah, but I'm always using 10-point stop on NQ, and now I can't because I can't survive a trade for longer than a nanosecond. I said, yeah, but that's not the reason not to trade. That's the reason to adjust your stop to the volatility of the market, and also adjust the position size accordingly. And he said, but I've always used 10 to, how long have you been trading? 5 years. Yeah. So you've not actually been through, I don't know, it was like 3 years or something. So it was like, you can't use the same size stop loss through different market conditions, okay? There are times when you can use super tiny stop losses of like 3 points in ES or 1 point in ES. Back in the day, that was like not impossible. Why? Because it would only move 4 ticks for the entire day. So you would still be doing the 4-to-1 adjustment on the stop loss versus the range that you're working with. And it's like, yeah, man, it's like, of course you need to adjust the stops to the volatility of the product. And then they went, but I'm just going to stop until it blows over. And I said, dude, what if this is the new norm, like it was during COVID? Because we got a kick up in volatility that markedly changed ES and NQ. Because before then, we had like NQ trading in a 75, maybe 100-point range per day. And then COVID came and the ranges came back into equities and never went away, right? Now we're getting a reduction that kind of looks a little bit like the dry up of liquidity. We have summertime coming and whatever. Last 2 summers, we were very fortunate to still have very lively summers. That's not the norm. You know, we had the election year, and then the previous year, I don't know, we also had something, but it was more lively than normal. But actually, the outlier is the movement during the summer. Usually, you get a huge dry up of everything across the board. Gold less so. It's probably the only product that still keeps moving during the summertime with some range. But everything else across the board, it just dies since halfway through July, all the way sometimes through to like second week of September. Because that's when the big boys are away, right? So nobody's in the room, nobody's trading, and it's all just like random walk, and it's just like like really dull days. There's a way to make money, but yeah. So yeah, whenever you are talking about profitability, talking about trading, there will always be adjustments. So it's never, okay, here's the next question. Did I read that? Does it ever get easier to trade psychology-wise? Yes. Yes, because you get to know yourself. You get to know your mental triggers. You get to know, actually, Deeyana Angelo, let me just wind down your question with the following. Was I profitable from the start? Yes. Was I consistently profitable, which is a completely different point? Was I consistently profitable? Yes and no. There was like a lot of mishaps along the way. It was never a linear process. It took me 9 years before I was like, okay, now I don't have massive F-ups, and it's generally quite consistent and in a very smooth curve generally. Yes, there's drawdowns, but it's not like one day up 60K, down 50K, the other up another 15K. I don't have that. Like all of my wins and all of my losses are not super dramatic. They're like kind of within, you know, 1.1K up to 3K. But 3K would be like a day where I'm like, right, well, I've got some money, you know, from whatever, the buffer or, you know, the account balance that I'm like, and today I really think that this is going to go. But then you get to a certain point, like yesterday, I got to minus 1.6K and I'm like, look, I haven't tried all day and it's just, let's just give it up. And once you get to that point of surrender mode, now I don't have all of my lovely, lovely funny cartoons that I like to put down because they're on my old computer and I haven't transferred it all yet. So there is this excellent funny cartoon where the lion finally catches up with the gazelle, and it's an anime. It's literally a cartoon. It's an illustration, and in that exhausted moment, the gazelle goes, do you really want to ruin all that cardio with a snack? Like the gazelle turns into a wise ass, right? Into a somebody who's cracking jokes. Why? Because they've surrendered. There's no more. And when you learn to get there before you blow up, that's a complete game changer for your mindset. Jerome yesterday talked about imagining a room in the visualization where you walk in and you have basically buttons for different states. I imagined a mix desk with knobs where you can tune each one of them individually. So it's very hard to do. It's very hard to do, especially if you've never done any mindfulness or self-awareness and introspective work on yourself. But it's so helpful. You imagine each part of you, like fear, FOMO, frustration, anger, as little knob on the mix desk, right? And then you go urgency, right? All of them, whatever that might be for you. And then you go to the mix desk in your mind and you go, which one is lighting up crazily? Which one is like, okay, it's frustration. Let's tune it down. Let's tune that down. Tune it down. Obviously, use it work for you, because I know that when I was really frustrated as a novice trader many moons ago, that wasn't enough. Breathing was not getting me there. My heart rate was still like up in my throat. So what I did, I went to the gym to completely beat things out of me. Just going. But you know, I'm a very passionate person. I am a pretty no-nonsense person as well. Have very thick skin for many things. And, you know, I've been through wars, man. No troll that comes into here means absolutely nothing to me. They can troll all you like. Troll all you like. I don't care. It's like, once you live through 3 civil wars by the time you're 20 years old, nothing effing scares you, okay? But yeah, each to their own. Obviously, we've all had very different lives. I probably have a higher emotional threshold for reactions than most people, which is helping me in trading, right? I don't freak out. Even when there's a big loss, like that. There was one time that I did get frustrated, and that was the point where I lost the 70K. I cried in the corner. I actually remember back in the early days of TopstepTV, Dakota said something really funny. He said, "Are you really a trader if you haven't hugged yourself and cried in the corner at some point?" It's like, it's so true. It's like in the beginning, you just don't know how to deal with all this like myriad of emotions. But it's down to keeping track of your mental triggers. It's like what makes you go and tilt? What happened in price action that made you go and tilt? Not just, oh, I lost the trade. What was price action doing when you lost your shit, right? Was it too fast? Was it too slow? Was it lack of direction? Was it direction completely in the wrong way, but you kept going with your original idea, expecting a fake out, but not waiting for price action? All of that, like drilling deep down into what your mental triggers are, can help you so much. Let's move on. Rect says, at what point did you scale up, or do you trade the same size? So I use the concept of 1% per trade. Now, I was a swing trader, so that meant that I didn't trade every day. So I traded maybe once every 2 weeks. So 1% per day, shooting for about 5 to 7% return on that one trade. I never went past that on my personal accounts. In fact, as the accounts grew larger and larger over the years, because, you know, obviously I made money as a prop trader as well, I actually reduced that. I reduced it down to 0.35% per position. In futures, the way we're doing prop right now, it's usually more aggressive. So I do allow myself between 2 to 4% per position size. However, I don't do that in the beginning stages of any combines. Now, I have a live account, so any combine that I pass, I can't do squat with it, right? So it's just going to sit there. So I don't have a need to be passing combines. I'm just going to use them as an educational tool, or when I want to, for example, this week, wait for NFP to shake out, or I want to trade later in the day, but I still want to maybe pop in a couple of trades to kind of show some setups, like this core resistance smash and then a follow through. That's what we were doing here today. But generally, I did not scale up until, like, I made roughly, if you're kind of going to average it over, 100K for the 5 years that I traded per year before I went into prop. So, I don't know whether that means anything to you, but when I went into prop, the prop firm was scaling you at a different rate. So once I got past the apprenticeship, it basically worked like this. So you get into a prop firm, first month you're given one lot. Now, the prop firm that I worked, gave you a $20,000 monthly, actually an overall loss limit. There was no daily loss limit at that particular prop firm. There was just like an overall limit. You could also trade overnight, but you had to run it with a third of the position size, and then make sure that you're calculating like swaps and like all of the other stuff. It used to take me like an additional like half hour to do all of that at the end of the day if I wanted to carry over a position. Over time, it just became easier if I became intraday completely, you know, whatever. But the scaling up prop firm way was done by you being given the base amount. Then if you make, let's say, like in my first month, first week didn't go so well. Then they put me back on the sim. But when I went back to live again, I actually managed to make 25K in my first month. Because I was there for already 2 months before I went back into live, I had 6 grand's worth of the fees to recoup for the desk fee. And then I also, like the way the profit split was happening, you start from the lowest tier, which was only 20% of the profits. But the rest of it went towards my next month's risk allowance, or most of it. I got paid like 1,250 for that first month. And I was like, yeah, that's, so I made 25K net. To me, it's 1.2K. Brilliant. So yeah, that was a little bit disconcerting. It's probably the worst feeling ever, worse than blowing up any account. Thinking, yes, I've made 25 grand. It's amazing. And then you get the actual net sum payout from a prop firm first month with all the fees and everything. And you're like, okay then. Now what? So, you know, it kind of like it just slashes your ego immediately. It's like you think you're the wizard. You're nothing, baby. So the next month they scale you up more. So the next month allowance will be 5. So now you have 5 contracts to play with. If you do well the second month, and it just so happened I made 60 grand on the second month, and I remember these because I'm just, you know, it's very very finely etched into my head because it was my first prop trading job. And yeah, I got paid a little bit more, but again, most of it went towards the next risk allowance. It really wasn't until they bumped me up to the percentage payout of 40% in favor of the trader that I started seeing some serious cash coming in, right? But it was a huge journey, and you know, by the end of it, in order to generate 40K a month, I had to trade like position sizes between 80 to 120 contracts per position. They were just pushing and pushing. It got really stressful at one point because I was just like, oh, man, I can't, like, there's easier ways to make this kind of money. And then I decided to leave, and I went back to London, and I tried finding a similar prop firm. And whilst I never found exactly similar prop firm with similar rules and stuff, all of the London prop firms, they had almost like a 220 hedge fund split. It was really odd. But anyways, it was a journey, you know, big journey, very different from what you guys are experiencing these days. And I think you guys have it easier. We weren't allowed to mess up. If you messed up, you would be out of the company. We've seen that happen so many times. Somebody comes in with collateral, 25K. They lose the 25K. They're out. They literally go, you know, the risk manager comes. You know, the shoulder tap. Yeah, that's usually how it happened. Or in the recent times, you would get like a private message pop up and go, can I see you in my office? And then you would have the walk of shame going to the director's office, and you would sit down, and they would be like, yeah, so, yeah, you know, they would talk you through the loss, and they're like, you know, your collateral is gone. And we've even heard people going, can I add more money? And they would be just, no, sorry. No. And now you mess up because everybody's learning, right? And even those people were learning, but the opportunities to try again were just not. They were very expensive, very prohibitively expensive, and you would have to hop to another firm to try again. And then after a while, if you've been through enough of them, everybody's going to blacklist you. It's like, oh, there's that person that blows accounts all the time. It was very different, you know? You couldn't just blow up over and over and over, and people keep coming back and coming back. It's like, oh, yeah, it's great. It's not a good thing. So, yeah. So scaling up to me, it was, scaling up for me came in the form of prop firm capital. I just traded my 1% per trade for many years, and, you know, I've actually gone down from that in my personal accounts. To the point that one loss, even though it's bigger than anything that we're doing on prop, it just doesn't hurt Because why? Because the pain threshold of the account balance size versus the percentage of capital overall. And it shouldn't hurt. It shouldn't hurt. It should maybe hurt a little on prop, but not enough to go, oh, God, ouch, like I'm going to have to start again. That's not a good mindset. So just keep that in mind. It's okay to scale up, but just make sure that you have at least 20K of buffer before you start scaling up to anything. I would say 20K is where maybe you can try running. It's difficult. I would actually advise you that you don't go over one mini until you're up at 30K. But that's me. I'm a bit risk averse these days. So, you know, risk averse Granny D is just how it is. I'm not super risk averse. Like if you compare me to, you know, some of the other people who are generally only trading micros, you know, once I get up to about, you know, 15, 20K, I will stick to minis. It's only if I drop back down to 10K, below 10K of balance, I will go back to micros, 5 micros. And then if that keeps going down, then I'm going to go down to 3 micros, try and dig myself out. So, you know, I'm not that risk averse. Is still aggressive trading on prop, but it's less so than anything that we see from some people on TopstepTV. So, you know, take it as you will. We're all different. Anyways, tumors are good is torturing me with the textual thing. So I'm just going to glaze over that because we're at time as well. So let's take one last question. Very good question from Zero Sum Cat. How do you not get stuck in that mental place where you can allow yourself 1.5K loss and be okay with it for a prolonged period? Here's the thing. I will not allow myself to have like 1.5K loss every day. And look, if I have 2 days of loss limit on the bounce, I will immediately reduce size. So, you know, I'm not going to wait until I bleed the account to death. Like 2 daily loss limits, I'm like, okay, need to size down now. So this is why Monday through Tuesday, I actually ran a 5 micro copper during Asia because one of my swing setups actually came in. And on 5 micros, I managed to get 1.1K. So you don't need to trade large to generate serious amount of cash. You know, $1,000 day is fine. But as soon as I start to notice, like let's say, and you know, remember I know how to stop. I'm not going to be smashing the 3K daily loss limit every day. I don't do that, right? 3K loss, like the most I ever have as a run of daily loss limits, but my personal daily loss limits, not the 3K, this is how it would go. I would push it on one day, wouldn't work, 3K, minus 3K. The next day, if I have another daily loss limit, that's likely not going to happen, but I will stop at like 1.8. Third day, if I still don't manage to read it properly, it's going to be 1.1K. I'm going to stop at that point. The next day, I will again lower my expectations down to 775 for the daily loss limit. So the more days that you go into a drawdown, the tighter shackles you need to be putting on yourself. To ensure that you stick to that, please lock up your risk settings the day before Globex Open, right? Not on the day. Because I promise you, if you don't lock up those risk settings, you will move the effing thing. You will go, I'm 700, but I'm just going to give myself another 200. Bam. Down 200. I'm just going to do another 200. Famous last words, right? So those are some of my coping mechanisms. I think the biggest losing streak that I've ever had in that manner, you know, diminishing daily losses as the drawdowns keep happening, was 6 days. I've never gone over 6 days of losses. Okay, so that is the expectancy that I have if I get into a really bad rut. Most of the time, the way it works for me, it will be one good day, then minus 700, then plus 1.1, then minus 1K. That's like when I'm in a bit of a rut and I'm like, so to me, it's more like up, down, up, down, up, down. But it's never, you know, just a straight up daily loss limits bonanza until the account is blown. I'm one of those people that when I get into a drawdown, I lose money slower. If you are losing money, lose it slower. Okay. I'm going to end it there for you guys. And don't know if I got any dogs in here, but let's do Pete the Process Parrot for the end of the stream. So Pete the Process Parrot is going to warn you to slow down. Okay, that's it for today. This has been the Eurotrade. Thank you for joining me. I will be on Lunchbox Trading tomorrow, but nothing today. And obviously it is the weekend now for me, almost. So have a great weekend, everyone. I will see you again on Monday for another episode of the Eurotrade. This has been the Eurotrade. I'm Marcus Doherty. Have a good rest of your day. Take care.